Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein of Linn and Associates with your metals market update, and this is for Monday, and we are now at April 30th, 2018, just getting on to 3:15 p.m. Central Daylight Time. So as we are, you'll see these markets will stop trading in about a minute or two. They'll pause in the stock indices, reopen at 3:30 and go from there. But as you can see, the metals did not have a very good day. Now, this is Tariff War Day. It's also a day where there's going to be talk about Iran. Lots of talk as Prime Minister Netanyahu of Israel came out and he says he's got the trove of troves, showed it on public television there, of all the documentation that Iran has been cheating all the way along. Of course, the Iranians will say it's fodder, it's not true. It just gives Trump more reason to break away from the agreement. I don't know. But I know that the market's looking at it, and it's kept a bid in the crude oil today. It had no impact on the gold market, and it's not breaking the dollar down. As you can see, you still have a strong dollar. So if we go to the metal markets, I don't think you can get away from the fact that the weekly chart is still in a down thrust. The market is not bullish at all. It's got actually a pattern of lower highs, lower lows, and it's closed under the 18-week moving average of closes. When we take a look at a daily bar chart, as you can see, the market is leaking away. So the support that could have come in didn't. It's that simple. And when we take a look at the swing line, this is what we call a vertical price break. It's not off of a trend. When you got to $13.59, if you look at it, you've broken $49 in this market, and you have not had a day with a higher high. Are you looking at that? That's very important. This means that you caught a whole group of people in the marketplace. Now, where the market went down to today of importance was the 200-day moving average of closes. Long-term averages catch people's attention. The bad news about it is while the 100-day average had done its job, and if I take you back here, of offering support to this market time and time again, getting down to the 200-day, regardless of what happens from here, that is not a sign of strength. That is a sign. Remember when in the stock market they were talking, oh, we're going to the 200-day moving average of closes? Then there was relief that the market bounced away. Well, gold people have to feel the same. Resistance is back at the 100-day average, that 1326.5, and you are riding the lower Bollinger Band. Riding means instead of the market getting excessive, it's just leaning on it, trending itself down with momentum now converting. I want you to look at these. Both numbers are under 20 there, and both numbers were under 20 on Friday. If on Tuesday both numbers stay under 20, we embed. We convert the process of momentum from being oversold to locking in a bear trend at these low numbers. So you've got to pay attention to that. The gold-silver ratio continues to move out, but back into the 80 level. We were up here at 82.45. We back to 77.98. But gold, as long as this continues, is what? Stronger than the silver. And when you look at the silver, it failed miserably at its gray line, the 200-day moving average on the upside. So you do pay attention to those longer-term averages. My guess is silver wants to make a run to the lower Bollinger Band that is oversold, so I wouldn't be surprised to see short covering against it. We've seen that in the past as the market was hitting that number, so why should I expect different? In the copper market, the trend is still down, and I think traders are all looking to see what is the U.S. and China going to do as these tariffs come out. We've all been looking for words today telling us, are there any exemptions? Are they going to wait on China until the trade delegation gets there? I don't know what's going on, nor does anybody else from what I'm seeing. And the market's got the lower highs, lower lows, still bearish, oversold, target the 305 area. But obviously, not knowing how this trade talk is going to go with China puts this market front and center, and it is a market that is under pressure right now. Same in Platinum and palladium, you'll see these markets are lower highs, lower lows, all oversold, but in a downtrend. Palladium, lower highs, lower lows, momentum down in a downtrend. You'd have to take out 982 to negate that. Right now the bears have really taken control in all the metal markets. It goes hand in hand with the dollar index, which is what? Riding the upper Bollinger Band, and I want you to look, even though it's overbought, today, this is the flip-flop of the bearish embedded reading. You have both numbers over 80. On Friday, both numbers were over 80, and on Thursday. So you have an embedded reading. If and when the red line turns under 80, I'll look for prices to come down and challenge the support being offered by the 100-day and the 18. It doesn't have to, but that's what I'd expect. Until that, nah, this is still a very, very bullish market situation, and one that isn't to be taken very lightly with all that's going on. We're going to be writing in great detail now about all that's going on between Iran, the tariff deals, what's happening. Obviously, it's going to affect everything from a soybean market to a copper market to your gold, your silver holdings, and how does it impact the dollar. So we cover all these areas with our in-house research. We send these out throughout the trading day by email to our clientele, and they use it the way that you would think they'd use it. You know, it's both a mixture of technical, fundamental information. And if you ever have our charting platform, you can actually hear us talking and telling people what we think is going on. So if you'd like a free trial to all this, it's really simple. Just either give us a phone call. You can go to our website. You'll see a carousel. Actually, it's a page. You'll see it moving right in front of you. Click on it at any time. There'll be a form to pick out, and away you go from there. You can always click on right here if you're watching us on YouTube as well. With that, I'm Ira Epstein. You have a good day, and I'll see you tomorrow.